All right, let's see here. I'm just gonna be basically hanging out, just talking to myself, putting some charts together and see what we can come up with. Turn the lights down low. I don't know about you guys, if you had a good time. Hopefully you took advantage of Taco Tuesday. It's pretty late on the East Coast. I think it's probably like 12:30. I'm on Central Time, so a lot of people they think just because I'm in Florida, it's East Coast, but I'm actually Central where I live. Um, and if you don't know anything about me, my name's John, and I'm a supply and demand trader. So basically, what I'm gonna be doing tonight is probably going over like three or four charts, just kind of showing you how I pick out supply and demand zones, and just kind of hang out with you. So if you guys have any questions, I probably won't see them because honestly, the way I have my OBS set up right now, I'm not seeing any chat or anything like that. But I do believe I should be streaming on YouTube. So I'm just going to pull this up really quick um, and see if we have that over here. And by the way, guys, if you are just now watching me and you have not watched this video over at Simpler Trading right here. Okay, this is my intro into how I trade. So if you guys are interested and you want to see that, the just go into Simpler Trading. Look for me. Kind of a cheesy picture. Apologize. Um, but yeah, I mean, I pretty much hit it like in an hour. But with supply and demand trading, you know, it's there's a lot to it. So I feel like I make it sound easy, when I talk about it, but and I'm told I do a really good job at it, but I think from experience it still takes you, a long time to really grasp um, the whole thing. It takes a while. Tonight I'm going to be using, instead of Thinkorswim, I'm going to be using TradingView. It's just a lot quicker. I might regret it in the morning because I trade off of Thinkorswim and, um, I'll be like, damn, where are those charts at? And then, they're on TradingView. But the cool thing about TradingView, I have my indicators on here as well. And you can view them on your phone, which is really like a huge plus because I can't do that with Thinkorswim. Not that I'm aware of. That would be really neat. But let's start off here with just ES futures. We're going to go with the weekly and just kind of give you an idea what I'm looking at. I'll be drawing on the charts to kind of show you that as well. All right, and we'll go here just like this. Let me pull up my tool. And let's go right here. Good. All right, so the first thing I'm going to be looking at is topping wicks, right? So topping wicks are the first thing that's going to let you know that the bears are in control. If you're new into technical analysis, I would ask you to watch my really quick 3-minute video where I talk about topping wicks. This is like the first sign before you see a pullback, all right? And so you can see that. We can come back here and here, here, right there. I love this. I love topping wicks because it kind of helps you and the idea that there could be a reversal. Now, as far as this supply zone goes, I want you to understand if we use the standard inside and down formation, it would be looking something like this right here. And so you can see that we are about halfway between the supply zone on a weekly chart. Now, what I'm going to do, just because that red sometimes puts a lot of fear in people and they're afraid to trade inside there, which I think you should be cautious. But if we take this and just kind of go right above all of these wicks, all right, and do this right here, and what I want you to concentrate on is when we zoom in here, the line itself, all right, so the anterior line, if you will, or you could say a proximal line to price is cutting through all of these wicks. So in essence, it's like a trending line, right? And we can see that the top of the box is encompassing this wick over here as well. Okay. Now, the bigger picture is if we take this supply zone and we come over here, this is the supply zone that I've been waiting for a very long time. And it is like you should be cautious here. This is a huge pullback. Look at the down pressure from this move. And what you want to be looking at as a supply and demand trader is looking here to see if price, when we left the zone, did price ever come back to retest it? And we have not come back to retest it, folks. We've gotten close many, many times, but it's just a big tease. It's a big tease for somebody like me who, my concentration is, hey, I want to go short here, you know? As we build up and things are looking really good, and I'm hearing a lot of stories that a lot of folks are bullish, but to be quite honest with you folks, we were bullish way down here, and we were bullish here back in the beginning of the year. On the quarterly charts, we came into demand. We had a really nice January. February absolutely sucked. I'm just going to be very transparent. It was my worst month. And for me personally, just trying to build back the capital that I lost during that February timeframe. Now, I've had some amazing trades. All right. I hit 5,000% on J&J. I think that was a week or two ago. That was a really nice trade. I hit 1,000% on Tesla in the beginning of the year. And that accounts up. So I love that. Overall, though, the intraday trading and the chop is really exhausting. And I want you to notice what's kind of happening here. And I think it's pretty straightforward. So if you have some technical background, I mean, you could see that we have lower highs, okay, and then that we have higher lows. And if you drew lines here, basically it would just look like this, okay? So the structure, the bigger structure on ES futures, right? You just kind of bring it in and get some perspective. All right. And if we were to draw a box around this, you could pretty much say that about right here, all the way into, I'm going to go about right there. You could say that this area in here would be neutral. And by the way, guys, if you don't use TradingView, one thing that I love about it is that you can set templates and I don't have to write in these things. It's already there. So this is a neutral box and you can kind of just play around with it. And what I like to do is when we're in a consolidation period like this is I like to reference that in this neutral box, if you will, when you get higher to the top side of this box, I want you to think caution, okay? And as easy as that is for me to point that out to you, I can tell you from experience as being a coach to many, many people that it doesn't come easy. All right, most people are very what you would consider FOMOing into levels like this to the upside. And when price is coming down to the downside, they are actually fearful. And so when we look at it, we're like, oh, that's easy, right? We could just come in here and trade this to, the upside. That's easy, right? It's always easy in hindsight. And a lot of traders, what they'll do, especially in this space, is that they spend a lot of time going over with you high insight stuff. And I'm a huge advocate of not being a high insight trader. We like to create the zones, wait for the zones, and then trade out of those zones. So we are able, I believe supply and demand is the way to anticipate trades. You're already creating the trade plan itself, and then you're waiting for price to get there, and then you have a plan developed around that. So you actually have some time to prepare. I know that when I first started trading, it wasn't like that. It was like last minute thinking, allocation was crazy, things got really difficult. So I do believe this is the biggest edge in supply and demand trading. But what I want you to understand is as we go low, we're looking to buy. As we get higher, instead of getting FOMO, we're actually looking to trim and pull those stops up and get out. Now, I tell everybody I use the ES futures as my portfolio driver. I don't necessarily have to trade futures. I'm not a die-hard futures trader, I guess you could say, but we trade a lot of futures. When I say that, I know people who just strictly trade futures. That's how they make a living. And the strategy that we teach, they seem to really, really like it. So I'll kind of go over that with you here in a few minutes. The higher time frames, though, that's where I believe, the bigger picture should be right now, because when you're suffering and you're worried about chop, the last thing you want to be doing is looking at smaller time frames, because it can really be exhausting. So the bigger picture, you're just consolidating here. All right, you're just basically digesting. We're waiting for news, whether that's tomorrow for FOMC, which I don't think so. If anything, I think that could push us into these topping wicks over here, and if for some reason it pulls back, I think you're saved by like 4,000 to potentially 39 and a half. I think it's a buyer's market. I just think that you have to be very patient, and you want to try to buy at the lower end of the curve. If you were to look at this as a curve, I'd be looking at buying here, and again, just being cautious up towards here. Okay. So that's ES on a higher time frame. I'm just going to jump over to the daily and kind of show you what this looks like. Okay. And you can see that the daily itself is going sideways as well. All right. It's going sideways as well. And it's pretty boring. All right. If we come over to the smaller time frames and we come into a 4 hour, all right, and we come over to the 4 hour and we're going to turn off, let's see, we're going to keep on the PMZ, and we don't need that on there at all. Just some stuff I was looking at. So if you look over here on the 4 hour, all right, the biggest thing that I look for is whether or not we can hold the cloud. Now the cloud, the EMA cloud itself, is built for trend. These bands are to help you. When price pushes over them, we're looking to stay long. See how price stays above there? And then when we dip in, we want to be a little cautious. Look how it dips and it comes back down, finds a little love, gets above, but now it's starting to really slow down here. You guys notice that? It's starting to slow down a little bit here. All right, and it's just kind of going sideways. And so I want you to be prepared and understand that, tonight, I don't expect a whole lot. It's a nice sideways trend. And so we're going to really have to dig into the smaller time frames. All right. And we want to apply the same methodology. Are we above the cloud? Are we below the cloud? If you're below the cloud, be cautious. Be looking down and to the left to see if you can find some sort of demand. Okay. That's the idea here. So we're going to take some of this stuff off. We're going to clean this up. Okay. I know. You get too much stuff on there, it starts to look a little crazy. All right. So I want to show you some zones that we can identify by just using pretty straightforward inside and up and inside and down formations. The first thing I want to show you is this inside and up formation that's right here. Okay. Notice the explosive move that comes out of this. This is called demand, folks. We understand that somebody in here wanted to buy. And if you look over here, there's this beautiful inside and down or inside and up formation. Price comes down into that inside and up formation. It then pushes up. These are the idea that we locate these formations, and then we want to be on the right side with institutional buying and selling. Now I have to find something to the upside. Where is my supply zone? So first, let's just go ahead and identify the demand zone that's already worked. All right, and we don't need to be perfect about this. If you're trying to be perfect in trading, it can really hurt. So let's go to settings. Let's just name this demand. Okay. And you can see, again, just so you guys can see, it's this area right in here that I am identifying. Okay, just like that. So we just kind of go like that. We wait for price to come in. Boom, it pops back out. Okay. Now to the upside, I want to be looking for supply. Now the first thing I'm going to note going into tomorrow is the idea, okay, of anybody that's shorting this, they have stops right above here. Okay, so the market likes to build liquidity. We don't need to go into that, but the idea and the theory is basically the market's going to show you shapes and all kinds of pretty things that you like. And it's basically going to build liquidity by taking retail traders' money. That's you and me. Usually we have stops right underneath these areas. Price will come in, it'll break down, it'll take these stops. These traders will get, taken out of a trade. Price will then come back up. They'll start chasing it. Price will come back down. They'll get really pissed off. They'll get taken out. And then they'll just watch price come back up. They'll finally get the nerve to take a trade on this breakout here. It'll be a weak high. It'll come back in. And the market has won. It has built liquidity and taken money from both sides of retail traders who don't have a legitimate plan. Okay? So, what to do? Stay patient. My whole thing is like, it's not that we can't trade in here. We have a process for that. But the bigger picture going into tomorrow, folks, is that we have a demand zone down here. We're basically building liquidity within these zones. If you like shapes and stuff like that, you can come over here and say, oh, well, this might be like an inverted head and shoulders or something like that. But just note, we're just hanging out in here, okay? Up and to the left is where I'm more focused. If price starts to break over this level, I want to be looking up and to the left. Notice we have this area here where there's a sharp move down. This is a sharp move down, folks. This means that supply outweighs demand here. This means there is a blueprint here to let me know that traders don't want to be here, okay? This is where we have a selling zone. Now, the overall inside and down formation is not there. But I know that if I reduce the 1 hour into a 30-minute, I'll most likely find something there. So I'll go ahead and do that just to show you how I can refine into a zone. And when I look closely, there is an inside and down formation. I'm going to go ahead and put a box on this, and we're going to go to about right here, okay? And this is we're going to stretch this out just a little bit, and we're going to go ahead and go to settings and put supply on here, okay? Now we have two opposing zones. And what you'll notice about this, which is really nice and pretty cool once you get good at this stuff, is that we're at equilibrium. When I say equilibrium, we're taking two opposing forces and we're basically 50% between the two. Now we can test that by taking the Fibonacci's, and I can go ahead and measure, okay, from one area to the next. Notice that we are between the 50 and the 618, so pretty much at equilibrium. That's what I mean, okay? Now this makes a lot of sense, folks. Why does this make a lot of sense? It's because when we have a catalyst that's looming, whether it's CPI, PPI, FOMC minutes, the market likes to put you at what I consider speculation, which is 50% or equilibrium between two opposing forces. This is where I want to buy. This is where I want to sell. They put you in the middle. This causes speculation. The market then takes liquidity from you. That is the idea here, okay? So, again, what to do? Well, we have these levels that I went ahead and put on here for you. And what I like to use is one of our most popular indicators, which is called the PMZ. And I like to bring this up in the morning. And it pops up on a 5-minute chart. And it's an auto level here. This red box, it tells me what my risk is in the morning, and then I use my other indicators to get my automated targets. So I'll know my risk in the morning, I'll know how far away my targets are, and it's really mechanical. If price breaks over the top of the PMZ, we're looking to go long, just like today, okay? If price breaks down below the PMZ, we're looking to go short into demand levels, and the same thing, we're looking to go long into supply levels. Tomorrow there'll be a PMZ, we'll have a risk on it, and then I'll have an idea of where I want to trade. Now we also have PMZs for the nighttime futures, all right? So we could trade off that as well. But for me, right now, I just don't find it that important to take a trade tonight, okay? But my overall sentiment and my overall blueprint that I'm looking at, folks, is right here. These are the levels that I believe that are in play for right now. If we open up for some reason into supply, be cautious. That's around 41.63 to about 41.70. If for some reason we wake up and we find ourselves down here at the green box, I'll be looking at taking some sort of trade to the upside. Please understand I can also trade SPY or SPX using the same blueprint. Okay? All right, so the next thing that I want to show you is go ahead and pop some trendy edges on here. Now, trendy edges are automated levels. Let's go ahead and go into the settings. I'm going to go through here, and so I only want to see current edges. Okay, so it's going to be these. Now, what these edges do is they are levels that are automated that find me on multiple time frames, supply and demand. As you'll see, we have some yellow ones that are right here in supply, and we got some yellow ones that are right here in demand. What I wanted to show you is how to find that supply and demand, but just like most traders, what happens is we find a way to identify our levels and then get away from that because it's time consuming. I mean, that's what, indicators tools do is they help you save a lot of time. And so in this business, I want to spend more time focused on my trade and my process than looking around for the levels themselves. But again, I do think that it's super important to understand how to find them before you actually get into indicators, right? You want to crawl, walk, then run. That's kind of how the idea is here. Okay. By the way, guys, people always ask me what my setup looks like. So, like behind me, this is a setup that I use a lot for swing trading. It's kind of hard to see because the chart in the background looks really bright. It's a TV, but I'll cast over there with my trading view. I'm kind of surprised. I don't know why it's not casting here. Yeah, let's just put it right there. There you go. So typically, I'll have this going in the background, and then I have three more screens behind me that are, basically monitoring. I'm looking at my setups and so forth. And then in front of me, I have four screens. I'm doing a lot of live broadcasting and those type of things. And yeah, so the office is pretty big. Back there is the kitchen, right? My favorite place to go, especially when something's not working out, right? I'm trying to work on the gut and not eat too much, right? Anybody else do that? They get a little depressed when they're trading and want to eat a bunch of starchy foods. Yeah. So, anyways, this is the blueprint. You can see the edges are right in line. There's different color ones, so the reason why they're different colors is because again they're different time frames. But they help me find the levels. All right. So that is ES futures. The next thing that I want to come over to is gold. All right, GLD. This was a good trade that I took earlier in the year when most people were not bullish. And I take pride in that because supply and demand, basically, you're buying when most people are fearful, and you're selling when most people are just starting to get ready to take a trade to the upside. Now that's, sometimes it continues and that's great, but in this market, how I feel is that the market technically I feel is bullish. However, it feels like a bear market. There's a lot of like, negativity, but when you look at things across the board, they look great. They really do. Like, I'm not talking about the fundamentals. I'm talking about a lot of charts look great. Okay, they're starting to come back to life. A lot of them look really good. However, the bounces are what I would consider relief bounces. They don't follow through very often. And so you just need to be careful. And again, just to understand what we're looking at. Now I'm going to take you to a 1 year candle. This is my favorite when looking at gold. And this is what got me into the trade this year. Okay. And this is what it looks like. And I just want you to take this in for a moment, folks. This is really important. Um, this was my blueprint, and you can see the price came down into a zone. It pushed back in 2022 to the upside. And for any of my folks out there that are big into supply and demand, what we have right now, what's going on is a inside and up formation that you cannot know until the end of the year if this is going to be an up candle. But I do like the play off of the anticipation of it being that. And, as long as it's going above that line, I want to stay long, folks. And, you look at it, it's an absolute beautiful chart. You could take some Fibonacci extensions. You can map out where price is going to go by how long you want to be in the trade. So, I mean, if I came down here and used this trend, we're talking, 5 years ago or so. Okay. Now, I don't want to look, you can look that far. We can do both. We'll come up here, we'll double click, boom, and there it is. And I will tell you, this is my target for this year, around 210 up to about 225. So we're just going to do right here. It's a 231. Okay. Just like that. And these are targets for me. And it's if this, then that situation, if price stays above the body of that candle, around 181, I'm looking for it to continue up. Same thing, the idea, the theory, it's been a long time, but perhaps there are funds out there who are short gold, and there's stops above here. So the idea is that the market from a bigger, longer time frame will take liquidity. Technical traders will watch this, and as it breaks above here, they'll get pumped. This is about when everybody gets convinced it's time to go long. They'll pull it back in, build that liquidity. Who knows how long it would take? But I do believe within the year we should be able to hit these targets at 210, 230, and again, that's if price can hold these levels here at around 181. And really 181 is still kind of close. Like, what is current price? 186, so that's like $5 away. For a year trade or for a leap trade, that's too tight. So what I like to do is come up in here, and I'm going to measure from this candle into the pivot high, and I want to find this 23.6, and I would say 176 by 165. As long as it can hold in there, I believe gold continues to rock to the upside. Okay. So again, bigger picture, your mindset has to be right. If you're a trader that only trades like 5-minute charts and that's all you do, then this is not the type of trade for you. You got to buy a lot of time, you got to sit on it, and you got to wait. And you got to have a process around it. And again, I'm not telling you to buy or sell. These are just the levels that I like to use. Okay. All right, folks. So let's see. I'll look at one more chart, then I'll hit the sack here. It's going on midnight. And I'm trying to think, like, what is a name that's been getting my attention, for me anyways, and I'm just like liking it, There's a couple that have been really, I mean, there's a bunch, but there's one that's been quiet. Um, and there's potential here, and it's BA, right? We did like a weekly 85% or so on a trade. We sold it this morning. Not all of it. I kept some of it just in case. But this trade has potential. This is a 1 year chart again. Every candle is 1 year. And you could see that it came right into demand, folks. And again, if you don't know anything about how I find formations, you can watch the video that I just showed you earlier in this video, over there at Simpler Trading. But the zone itself is right in here. Okay, this is the big picture. We're going to go over here and go to demand, just like that. And you can see price came into demand and pushed back up. Now, this is one of my favorite looks, rounding bottom, right? Rounding bottom. And this, my friends, as soon as we go over this base candle, that's where things start to get interesting. Now, this is a bigger time frame. Okay. Let's just go ahead and identify. This is the first time I'm doing this, by the way. All right. So right here, I'm going to go above that body. Okay. And that price on that. And by the way, this is what I love about TradingView as well, is that it says 8 months and 18 days until this candle closes. Man, time goes by fast when you're getting old. So that's, for me, that's right around the corner. So the next thing that I'll be looking at is the wick. All right, so I'm going to come over here, I'm going to identify that wick. All right, boom. I'm going to identify another wick. Boom. Okay. Then I'm going to throw some fibs on it. And what I'm going to do is, for this particular range, I'm not using this wick up here. I'm not going to go into detail, but this is the way that I use fibs, and it works really well. I'm going to take this level here, and I'm going to come down right there. Okay, boom. And it starts to pick up. Check this out. This is what I freaking love. This is right in line with the 50 in this case. And for anybody that understands the bear and bull channel that I teach, we're above that bear channel. That's a positive as well. All right. And yeah, I mean, this trade is looking good as long as 203 can kind of stay intact right there, then I'm looking for our next target up towards 231. So I love the idea of this trade. Price is currently at 212. And when I'm thinking longer term, and let's say that people aren't thinking about this, 203 is a small risk for a reward that could push me up towards the 231 and beyond. Okay. I don't have my Thinkorswim open, so I can't see the chain. I mean, obviously, you want to take into account when earnings is. This is saying 26th of April. Now, a lot of times, this will be my last couple notes before I jump off. I do things a little bit different than some people. I'll buy options into earnings, as long as the process or the pattern is there. I'm not trying to buy it to guess which way earnings is going. It's basically, if you would say, a placeholder for a position or a starter. And let's just say that my allocation is typically $2,500. Something like this, I'd probably spend like 250, 500 bucks on, and I'd be aiming towards this 50, maybe somewhere right between the 50 and the 618. And I'm going to buy a lot of time, not into earnings. Like I would literally buy at least 4+ months, maybe 3 months out, and just start a position. If I'm wrong, and let's just say BA comes in a little bit, but I notice that it's not breaking below this 203. Now I'm going to add to that trade because I only spent 250, maybe 500 of the 2,500 that I was going to trade in the first place. Okay? Because the overall pattern is still intact, and I'm just going to add into the trade. Now, if for some reason I'm right and it takes off into earnings, that's cool, but that's not what it's neat if it happens, but I'm not trying to bet on that. I'm not trying to gamble. So I'm just using process, patterns, and so forth, and then the percentage comes later. Okay? So I'd add into it, but if it gapped up big and maybe we hit targets, then there's nothing I can do. I just end up taking these guys as a winner and probably getting out of the trade. Okay? Just depends on how much time there is. But I really like this setup. I want you to keep this on watch. It's something that I think that could end up moving. I hope that the gold review and the ES review helps you out as well. I'll probably be putting a chart out in the morning. If you guys like the content, just give me a like, please, and pass it along. And I'll try to do more sessions with you guys at night and just kind of hang out with you in the future. If you have anything that you'd like me to review,